Welcome back to The Fire Grind. My name is Daniel, and on this channel, we talk about personal finance with a focus on the stock market and investing in order to grow your wealth for the future. In today's video, I'm going to be talking about 6 different stocks that I've sold in my portfolio based off of a new strategy that I have for my Wealthsimple Trade portfolio. And if you don't know what the strategy is, it was in one of my previous videos, and you can check that out right here. In the first video, I talked about the biggest trap that investors fall into when using Wealthsimple Trade or any other $0 commission fee trading platform like Robinhood, M1 Finance, or even Webull, and these are in the States. However, in Canada, Wealthsimple Trade is the only platform currently offering $0 commission fees. So if you want to know what the biggest trap is, you can check that video out as well. And as well, if you're an investor currently and looking to open up a portfolio with Wealthsimple to take advantage of these $0 commission fees, you can click the link down below in the description, and that will give you $5 for free when you trade $100. Now going into the 6 positions that I sold. And most of these positions are small, and they actually failed to meet the criteria of being $200 in value at least. So the first one of these is Cargojet. In this company, I currently hold one stock, and I bought it hoping to build up a position. And the reason why I didn't build up a position is because the stock actually ran up quite a bit. And I bought the initial stock just looking to start opening that position, seeing where the price travels, and if it was starting to dip a bit, I'd continue to buy more. However, the stock quickly shot up by about 10 to 20% right away, and I didn't feel like it was great for me to buy any more at that time, so I actually haven't been adding to that position since I initially bought it. And currently, the stock price actually shot up by almost double what I initially paid for it. But at this price, I don't think I'm willing to continue increasing that position, as I feel like the risk for me is a little higher than what I'd like to take. So for that reason, I sold off Cargojet. The next stock that I sold off was ticker symbol DR. This is Medical Facilities Corp. And this is a Canadian-based company, and they own ambulatory facilities in the States. And these are essentially like hospitals, but they're private hospitals in the States. And their stock has recently dropped about 50% from where I bought it from. And the reason why I'm selling is not because I took a 50% loss and I'm freaking out right now. It's because there was a fundamental shift in the business, and they actually cut their dividends significantly. The dividend went from $1.25 or so all the way down to about 28 cents per year. So this is significant, and right now I don't feel like the company is in a very safe spot due to their financials. They have a lot of debt. Their sales are actually declining year over year. And for this reason, I don't think I want to stick around to watch this company fail. It is a potential that the company could recover. However, I think my money is better off in cash and waiting to deploy in other positions that I truly believe in. And this is one of the mistakes that I made by buying this company off of an article saying that Medical Facility Corp dropped like from $16 to $8, so dropped 50% there. This is a great time to buy in, and they have a chance at recovering. But clearly, by not doing my research very well, I bought into a company that continued to fall. The third position I sold out of is ticker symbol DSG. This is Descartes Systems Group. And the reason why I sold out of this position is because I actually own one of the competitors currently in this portfolio, and that's Kinaxis. And in DSG, I only have one single share, and I bought this company at around $51. And again, just hoping to build out the position if the stock price stayed around the same, but it shot up quite significantly from the time that I first bought it. And it went from $51 to about $62 in the span of a couple months. And I didn't know too much about the company when I bought it initially. I just knew it was a pretty hot tech stock in Canada, and I really wanted to keep an eye on it, so I bought that stock. The main reason why I sold Descartes Systems Group is because I currently own one of the competitors, Kinaxis. So I feel like I don't need to own another company in the same space, supply management logistics software. So I figured I would sell out of DSG because I only have a single share in it right now, whereas Kinaxis, I own about 5 shares right now, and that makes up a fairly good chunk of this portfolio on Wealthsimple Trade. DSG currently has a slightly worse PE ratio, as well as PS ratio and forward PE. And looking at DSG's balance sheet versus Kinaxis's, you'll notice DSG actually has more assets versus Kinaxis. However, a large amount of that is due to goodwill. And what goodwill is, it's essentially the extra amount that the company paid for when they acquired another smaller company. Essentially how the value of goodwill is determined is based off of the acquiring company, the amount they paid to acquire the smaller company, subtracted by the assets and liability of the acquired company. So basically the goodwill is the overpayment that the company made on the company they acquired. And for me, the goodwill is kind of useless because it's not actually anything that can translate into cash. Another metric that I compare between the two is Kinaxis' current ratio is around 1.76, whereas DSG is at 1.13. So that means Kinaxis is in a better financial position in the short term than DSG. And especially with this whole pandemic going on, I think this makes Kinaxis a more attractive investment. If you've enjoyed me talking about positions that I sold out of so far, please just take this moment to scroll down below and smash that like button. The fourth position I'm going to sell off is Freshii. And I actually bought this maybe about 5 months ago, and I read an article of Freshii, and just thinking about the company and the restaurant space, I thought the macroeconomics and the social trends would definitely help them out as a business grow, and I bought into Freshii based on these. But I think in the back of my mind, every time I go into Freshii, I don't think it's very crowded or anything. So that was a negative point against them, and I really didn't have great conviction into buying this company, other than the article and the trend of getting into healthier foods. But in Canada here, healthier foods hasn't exactly picked up. That's a huge thing in Cali though, so Freshii would do well there. So the fact that I didn't have much conviction and just be reevaluating my position in Freshii, where it's being so small, around $25, I'm going to sell off this position even though it's at a loss, just so that I don't need to continue spending time and thought into whether I should keep this position or increase this position. Because at the end of the day, the $25 that I lost is not going to be equal to as much time that I spend in the future trying to research this company. The second last position that I am selling off is Patriot One, and this is in a similar boat to Freshii. However, I had a bit more conviction about the stock because there was one YouTuber, Ali's World of Finance, who actually talked about this stock, and he had a speculative position. And I also looked a bit deeper into the company and really liked the tech that they're working with, and I thought there was a huge tailwind for them with the fact that gun control is being a huge subject in Canadian government right now. There's a lot of shootings that have been happening in the past couple of years, and Patriot One builds technology that's able to detect firearms. So this is useful in big stadiums or at airports. But the fact of the matter right now, in the current state of our economy, not many people are going to the airport, and people are avoiding travel for the most part. And as well as these large stadiums or just large gathering places, they're all completely closed. So Patriot One is going to suffer heavily because they're not going to be able to get contracts or new sales from these places that are closed down right now. So I'm going to sell this position now instead of waiting for any sort of bad news down the road, and as well as not needing to give much thought into this company going forward, as it is a very small position and not really worth my time. And the last company I sold out of was Sierra Wireless, and I held about 4 shares of Sierra Wireless. The reason why I sold out of Sierra Wireless is because my understanding of their business is not very in depth, and the position that I hold is extremely small. Currently, I hold a position in BlackBerry, which is a larger position, and they're in the IoT space as well. So I didn't feel like I needed to continue researching Sierra Wireless any further. I figured I would just cut this out of my portfolio. Again, it's not really worth my time to continue focusing on it, and as well as they haven't been performing that well, which kind of goes to show me as the initial red flag of why I should sell out of it. And maybe my reasoning for selling out of Sierra Wireless isn't as strong as other positions that I presented in this video. However, really it all comes down to time, and I don't have time to spend into Sierra Wireless, and this was really just a mistake in investing in the stock because it was cheap and hoping that it would pop and double my money in the next few years. So now that I've sold out of these positions, I've gathered a bit more cash, and I'm going to hold on to this cash looking for better opportunities in the market to bolster other stock positions in my portfolio. So definitely stay tuned and subscribe to my channel if you want to see what positions I end up taking this money and investing into in my portfolio. Maybe I'll open up a new position, or I will continue bolstering positions in my portfolio. I don't really know. I still have to continue assessing that, but likely I will be boosting up some of the positions that are currently a little below the $200 threshold mark, and these are companies like Well Technologies that I'm holding on to still, as well as TFI International, which I did a video on. You can click that link up here if you want to check out what TFI International does and why I'm bullish on them. And also smash that thumbs up button, as I have a goal for 30 likes on this video. So please help me out and do this for the YouTube algorithm so I can continue promoting my content if you got any value out of it. Keep up the grind and have a great day.